The political landscape was once again electrified on May 23, 2025. Former President Donald Trump delivered a stark ultimatum. His target was one of the world's largest companies, Apple. Trump declared that Apple must bring its iPhone manufacturing operations to the United States. This was not a polite request. It was a direct challenge, broadcast widely. The message was clear: build iPhones here, or face severe financial consequences. The core of Trump's warning was a threatened 25% tariff. This tariff would apply to all iPhones imported into the US for a company like Apple, which sells millions of iPhones in America. This is a massive figure. A 25% import tax could translate to billions of dollars in new costs. These costs would either eat into Apple's profits or be passed on to consumers. Trump's rhetoric focused on American jobs and national manufacturing strength. He framed this as a way to revitalize domestic industry, a familiar theme from his political playbook. The focus on Apple, a symbol of American innovation yet reliant on global supply chains, was particularly pointed. It was a high-stakes gamble, designed to grab headlines and force a response from the tech giant. The implications of this ultimatum were immediately apparent. Trump's demand presented Apple with an enormous logistical and financial puzzle, one that could reshape its entire business model. Apple did not issue an immediate, direct public rebuttal to Trump's May 23 ultimatum. Instead, the company's actions spoke volumes. For several years, Apple had already been working to diversify its manufacturing base. This was a strategic move to reduce its heavy reliance on China. The reasons were manifold: rising labor costs in China, geopolitical tensions, and the need for supply chain resilience. Trump's renewed pressure likely accelerated these existing plans. A key part of Apple's diversification strategy has been its growing investment in India. The company has significantly ramped up iPhone assembly in the subcontinent. This move serves multiple purposes. It caters to the burgeoning Indian market, one of the fastest-growing smartphone markets globally. It also provides an alternative manufacturing hub outside of China. Reports indicated that Apple was encouraging its major suppliers like Foxconn and Pegatron to expand their Indian operations. The shift to India, however, is not a complete solution to the Made in America demand. While it diversifies risk away from China, it doesn't bring iPhone assembly jobs to the US on the scale Trump envisioned. Apple's response seemed to be a continuation of its long-term strategy rather than a sudden capitulation. The company likely views its Indian expansion as a prudent business decision, regardless of US political pressures. The core assembly of the iPhone, the most visible part of its manufacturing, remains largely an overseas operation. The news of Trump's ultimatum sent immediate ripples through the financial markets. Apple's stock, AAPL, experienced a noticeable dip in the trading sessions following the May 23 announcement. Investors reacted to the uncertainty and the potential financial impact of a 25% tariff. A levy of that magnitude could significantly affect Apple's profit margins or force price hikes, potentially dampening iPhone sales. The market abhors uncertainty, and this new threat introduced a major variable into Apple's future outlook. Beyond Apple, the broader market also showed signs of nervousness. The ultimatum was seen by some as a precursor to a wider renewal of aggressive trade protectionism. If Apple, one of the world's most valuable companies, could be targeted so directly, other multinational corporations might also be in the crosshairs. This raised concerns about disruptions to global supply chains, increased costs for businesses, and potential retaliatory actions from other countries. The call to bring iPhone manufacturing to the United States resonates with a patriotic desire for domestic jobs. However, the logistical and economic realities present formidable challenges. The sheer scale of iPhone production is immense. The existing manufacturing ecosystem, primarily in Asia, has been built up over decades. It involves massive factories, a highly skilled workforce, and a dense network of component suppliers. One of the primary economic hurdles is labor cost. Wages for manufacturing workers are significantly higher in the United States. While automation can offset some labor costs, intricate devices like iPhones still require a substantial human workforce. These higher labor expenses would inevitably lead to a more expensive iPhone. A significant increase could impact demand, especially in a competitive global smartphone market. The ultimatum delivered to Apple was not an isolated incident. It appeared to be part of a broader strategy under discussion by Trump and his allies to exert pressure on various US companies. The goal is to compel them to shift manufacturing back to American soil. This America First manufacturing push targets companies across different sectors, While Apple is a high-profile example due to its size and iconic products, other major corporations are also feeling the heat. This suggests a potential widespread campaign to reshape American trade and manufacturing landscapes. Companies like Walmart, the nation's largest retailer, have also faced scrutiny. Walmart relies heavily on imported goods, particularly from China, to offer low prices to consumers. Any broad new tariffs or manufacturing mandates could significantly impact Walmart's business model. It would force them to find alternative suppliers or pass increased costs onto their customers. This could disproportionately affect lower-income consumers who rely on Walmart's affordable prices. The ripple effects of such policies would extend far beyond the targeted companies themselves, impacting retail prices and consumer spending. The overarching narrative is one of economic nationalism. The argument is that bringing manufacturing home will create jobs and strengthen the U.S. economy. The ultimatum to Apple is unfolding against the backdrop of already strained U.S.-China relations. The trade war initiated during Trump's first term created significant friction. Tariffs were imposed on billions of dollars worth of goods by both sides. While some of those tensions have simmered at times, the underlying issues remain unresolved. Trump's renewed focus on Apple, a company with deep manufacturing ties to China, risks reigniting these disputes. It could be perceived by Beijing as a provocative move, further complicating an already delicate geopolitical situation. China is unlikely to remain a passive observer if the U.S. aggressively pushes companies like Apple to divest from Chinese manufacturing. Beijing has its own set of tools it can use for retaliation. These could include imposing its own tariffs on American goods, creating regulatory hurdles for U.S. companies operating in China, or even encouraging consumer boycotts of American products. Apple, for instance, not only manufactures in China, but also sells a significant number of iPhones there. The Chinese market is crucial for Apple's revenue, making it vulnerable to retaliatory measures. The dynamic between the world's two largest economies is a critical factor in global stability. The authority of any U.S. president to impose tariffs has been a subject of legal debate. During Trump's presidency, various tariffs were challenged in court. Some argued he overstepped his constitutional authority. The legal battles often centered on statutes like Section 232 of the Trade Expansion Act of 1962. It's important to acknowledge Apple's investments in the United States. While iPhone assembly happens overseas, Apple is a major U.S. employer. Its headquarters in Cupertino, California, is a hub of research and design. Apple supports millions of U.S. jobs through its App Store and supply chain. The broader implications for global trade are significant. Aggressive protectionist policies could lead to fragmented supply chains. This shift could reduce efficiency, increase costs, and slow innovation. The interconnected global economy means these actions have far-reaching consequences. Tariffs, while intended to protect domestic industries, often have complex economic repercussions. Pause 1s. A tariff on imported goods can lead to higher prices for consumers, as companies pass on the increased costs. Pause 1s. This price hike could lead to reduced consumer spending, impacting overall economic growth. Pause 1s. Furthermore, tariffs can trigger retaliatory measures from other nations, creating a cycle of economic tension. Pause 1s. For businesses, especially those with global supply chains, tariffs increase uncertainty and operational costs. Pause 1s. Companies like Apple may face challenges in managing their supply chains efficiently, potentially leading to delays and increased production costs. Pause 1s. In the long term, the economic impact of tariffs can be far-reaching, affecting everything from job creation to technological innovation. Pause 1s. As global trade dynamics shift, businesses must navigate these challenges to maintain their competitive edge. Pause 1s. The economic landscape is evolving, and the effects of tariffs will continue to be a significant factor in shaping the future of global trade. Apple, known for its innovation and strategic foresight, has been actively responding to these evolving trade dynamics. The company has been diversifying its supply chain, sourcing components from multiple countries to mitigate risks. Additionally, Apple has been investing in automation and advanced manufacturing techniques to reduce dependence on any single region. To further strengthen its position, Apple is exploring new markets and expanding its product lineup. Initiatives like the Apple Silicon Project, aimed at developing proprietary chips, exemplify Apple's commitment to maintaining control over its technology stack. Moreover, Apple is enhancing its sustainability efforts, focusing on renewable energy and environmentally friendly materials. These initiatives not only align with global environmental goals, but also offer long-term cost benefits. Looking ahead, Apple is poised to navigate the complexities of global trade with a strategic blend of innovation, diversification, and sustainability. Despite the challenges, Apple's proactive approach ensures that it remains a formidable player in the global market. As the landscape continues to evolve, Apple's adaptability will be key to its enduring success. Stay tuned for more updates on how global trade dynamics are shaping the tech industry. As Apple charts its course through the turbulent waters of global trade, consumer reactions have been varied. While loyal Apple enthusiasts continue to support the brand, there's a growing awareness about the implications of these trade tensions on product pricing and availability. Some consumers are concerned about potential price hikes, while others are intrigued by the prospect of more made-in-America products. Market trends also reflect this mixed sentiment. On one hand, there's an increasing demand for transparency in supply chains and ethical manufacturing practices. On the other, the anticipation of new product innovations keeps the excitement alive. Analysts predict that these dynamics will influence not just Apple's strategy, but also those of other tech giants. In this evolving landscape, consumer preferences and market trends will play a crucial role in shaping the future of the tech industry. As we move forward, it will be interesting to see how companies like Apple balance innovation with the expectations of a more informed and demanding customer base. Stay tuned as we continue to explore the intricate interplay between global trade and the tech world. As we delve deeper into the intricate web of Apple's global supply chain, it's clear that the future holds both challenges and opportunities. The company's reliance on a diverse network of suppliers across continents has been a cornerstone of its success, allowing for innovation and efficiency at an unprecedented scale. However, the shifting geopolitical landscape and evolving trade policies are prompting Apple and other tech giants to rethink their supply chain strategies. The push for more localized manufacturing, driven by political pressures and consumer demand for more transparency, is reshaping the industry. Experts believe that a more resilient and flexible supply chain will be crucial for navigating future disruptions. This means investing in new technologies, diversifying supplier bases, and potentially reshoring certain production processes. Apple's proactive measures, such as expanding its production facilities in countries like India and Vietnam, are steps towards this resilient future. These moves not only mitigate risks, but also open up new markets and opportunities for growth. As we look ahead, the ability to adapt and innovate within the global supply chain will be a defining factor for success in the tech industry. Apple's journey offers valuable insights into how companies can balance global ambitions with local realities, ensuring a sustainable and prosperous future. Stay with us as we continue to explore how these dynamics unfold and shape the future of technology.